Good morning, welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I'm charging 500 rupees per month. You will get advanced prediction details as well as calls in the group. Before going to the Tuesday's prediction, I have to review the Monday market as well as how our call predictions are given. Nifty ended up in the positive 14,761.55, 232.40 points in the positive, 1.60% in the positive. Opened around 14,702.50, which is well above the previous closing. And the low is 14,638.55. High went around 14,806.80. Let's go to my prediction review. In our data it is shown bullish only, but still we need to play much more cautiously due to that the observed frequency is not we have, because it is a fresh day of the month, but still it is well above the volatile level 1, which indicates the bullish market. So the pre-opening is well above 113 points today, which is for 14,642 is the key level for the bullish market. It is opened well above that level, so that is the one indication that the bullish market intact with a stop loss of 14,581 minus 10 points. So 14,571.45 is the stop loss for the extreme bullish market today. That level is not broken, and surprisingly it is in the range of resistance level 2 itself, 14,636, and if you check it is in the range of that average as well, resistance level 2. So the lower side is got matched, so which is in the range of in between 14,636 and 14,639. So the low got matched, but the high is not matched, so we can expect one more bullish run on Tuesday as well, because the high is not matching. We have the positive side target as well. 40,806.80 is not matched in the data. You can see it is not matched between 3 points or even stop loss of 10 points. So that is the one more end. The next day the market is still having the chance to go bullish side possible, because we have the target in hand 15,262.13 on the positive side, and lower side 14,350.30. So lower side target is also we're having, positive side target also we're having, so which means it is not going to be easy to trade on these kind of target dates. So but how we can trade on this? You can buy and hold in both side options. I'll show you what are the calls we given in the group. So today specifically I told my customers to stay away from the market for the low risk traders, because high risk traders only I asked to buy these two options, which is 14,300 put option and 15,100 call option. Those put together we would have invest 7,500, because we had a good profit of more than 34,000 on Wednesday, Friday. So that is the reason we want to invest smaller amount of money, but only high risk traders, because we may know that if things are not going well, this 7,500 will go within a matter of 1 week. So but the call is given only to hold in a week time, so we can plan to exit in between if it is a good profit, or we can wait till Thursday. That is the idea behind this. Specifically low risk traders, clearly given, stay away from the market. That is the idea, because it is not going to be easy to trade, because all the premiums are very very high, so it is not going to give you a profit. It will erase your money only for the low risk traders. The idea behind this to give execute this call, if it is for example today itself it is gone like this, because we bought it somewhere around 45 on one side, then 55 on the other side, which both put together around 100 points. So both put together 100 points means if any of the one side particular level is going beyond 100, and one particular side going minimum of 30, which means we will get minimum of 20 to 30 points, so we may get some decent profit. That is the idea behind this, but strictly small traders must have to avoid. And that apart from that there is no call given, and this is the Tuesday's indication. The Tuesday is also indicating the bullish trend, but only thing is the pre-opening must have to open at least minimum of 1 point in the positive. If it is 1 point in the positive, it has a good chance to go bullish. If it is gap up, then we can see another bullish trend. But one key indication which we have got in this particular level, the volatile level 2 once again came inside the positive. That is the warning signal. There has a chance, if the levels of the high matching with positive average or bullish open target level or the bullish level, any of the three level or in between, anything high is matching perfectly, then the market is having chances to fall down from that level to any level. There is no limitations. So after reaching certain high, the market's still having the chance to fall down towards the negative average. This is one side of a angle. So there is the warning signal. It is not certain to happen, but there is a warning signal. That is the reason we are keeping both options in hand, because we do have lower side target still pending 14,350 range, and the highest side target pending for 15,260 range. So these levels and lower side, which is 350 range. So see how much levels, around 400 to negative 400, so almost 800 points gap is there. So it is not going to be easy to trade on these kind of days if you have like that. But only high risk traders can bet, or if you get the cheap price, you can bet accordingly. And the par value, how the par value is indicating, the par value is anything opens and the par value anything opens above 14,993.54, then it is opening up the positive target 1, positive target 2, and positive target 3. Anything less than 231.99, which is nothing but 232 points, so the negative target will get open, negative target 1, negative target 2, and negative target 3. But still it is showing extremely bullish, so it is not going to be easy to trade these kind of days. Only you need to keep both options in hand, because of the warning signal came from the level of the volatile level 2. So this is the warning signal for the bearish is also possible, because normally the volatile level 2 comes only in the negative directions, negative side. But if it is comes in the positive, means that is the warning signal for the bearish. It might have the chance, it is not certain. Though how we need to trade, if anything opens above the volatile level 1, the stop loss must have to be maintained in the overall average stop loss, which is 38.31 minus 10 points, so 28.31 is the stop loss for the extreme bullish. So it might go extreme bullish, it might go even 400, 500, and there is no limitations. We have the target in hand on the positive side, which is 15,000, so 262.13, even that level also possible. So we may not know where, but it has a chance, because the indications are showing if the high is matching, it has a chance to go down. So low risk traders, you need to play very cautiously. On the other hand, normal bullish market stop loss, if anything opens even 1 point in the positive, then you need to keep stop loss in the support level 1, which is 14,743.84 minus 10 points. So 14,720, sorry, 33.84 is the stop loss for the normal bullish market. It might go somewhere and decent positives from 30, 40 points, 60 points, or maybe 100, 200, whatever it may be, but it may have the chance to close in the positive. That is the stop loss for the 14,733.84 normal bullish market. On the other hand, if anything opens in between the volatile level 1 and the volatile level 2, which is 128.43 and 23.62, in between the market is opens, then what we need to trade is according to which side it is breaking. According to that, the stop loss will get activated in the overall average or the support level 1 for the bullish. If it is breaking on the downside from that level, then it will open overall average stop loss plus 10 points and the resistance level 1, which is 14,774 plus 10 points. So these are all the stop loss will get activated for the downside if the market is opening in between volatile level 1 and volatile level 2. The bearish market stop loss, how do we need to trade? The extreme bearish market, if anything opens less than 23.62, so that is the one important point we need to play cautiously, because if it is opens positive around 23.62, still it is showing extremely bearish is possible. So with a stop loss of overall average plus 10 points, so 14,848.31 is the extreme bearish stop loss. So anything less than 23.62 points in the pre-opening indicates that the extreme bearish is still intact. So it is not going to be easy to trade if the market is opens in the flat positive. And on the other hand, for the normal, if anything opens 1 point in the negative, the stop loss need to be maintained in the resistance level 1, which is 14,774.84 plus 10 points, so 14,774 784.84 is the stop loss for the normal bearish market. So it is not going to be easy to trade on Tuesday. You need to keep both options in hand, then only we can able to survive, because right now the SGX Nifty is showing gap up around 155 points in the positive, so which means 155 points means the market may open around resistance level 9 and above in between the positive average. So how we need to trade if it is opening means it is clearly extreme bullish market. So if you already holding a certain position of call option, if you are having two lots, you can book one profit and keep one lot at risk. If it goes high, if not breaking this overall average, you can end up more profit. If the market is falling, keeping certain high in these three levels or anywhere in between, then the market fall down means you would enjoy after booking profit, and one particular lot will got risk. So it is not that much easy to trade on this specific day. That is the reason I am telling you must have to keep both options in hand. If it is good profit or decent profit, or more than anything 50% to 100%, and booking is always advisable. Keep a certain amount of tolerable options for the higher profits, and that is where we can able to enjoy more profit if the market is going certain high and breaking those levels. So play cautiously. Let's see how the market is going to give us on Tuesday. Thank you.